Hi folks, Lee Gettess here with the Market Sense for the week of March 22nd, 2016. Trade Navigator is the software that provides the charts I use and stare at all day. And if we look at a weekly bond market chart here, it looks rather benign. Last week was inside the previous week, and this week is inside of last week. I gotta say, this might be a little worse than it appears. We came in Tuesday morning to news of terrorist attacks in Belgium, and that would normally cause a pretty severe flight to quality. People want safety in times of turmoil, and so they run into the U.S. bond market as really the number one safety usually. Well, that's not what happened here. So that's not a really good sign. I mean, they haven't broken either, but you would expect more buying than we saw on Tuesday. So perhaps this market's in a little bit of trouble here. We were looking at resistance up here in the 164.20 area, which they have yet haven't come close to. We also haven't broken support. That's around 161. Let's call it that down there. But look, if you look at the big picture and how far they've broken out above these old highs back here, gee, a dip down to the mid-Keltner band below 159, that wouldn't look bad or surprising at all. And of course, they could break even further. So I'm not really expecting that they're going to break this week. I don't see a reason for it, but they really should have rallied more, or would ordinarily rally more on the terrorist news. So I'm kind of worried that this market might be weaker than it appears. Stocks, you can kind of make the opposite case too. They had a little reaction overnight to the news of the bombs going off, but they actually spent the day session Tuesday going up pretty well. And of course, you can see since this double bottom, or even a triple bottom, if you go back to here, they've been an awfully steady climb up. Now that could mean they're due for a back off, but they're just showing no signs of it. They're holding up amazingly well in that environment. We were looking at support here just below 2020, I want to say 2018 roughly at the upper moving average, and clearly they haven't come close to that. The resistance to look up is 2056. That is resistance. I wouldn't be looking to sell it up there though. I mean, gosh, look at that momentum. They're going to have to slow down and turn down at some point, but I'm not going to be the hero that predicts exactly where that high comes in. And begin because of this move up here, if they turn down and go to the mid-moving average here at 1995, gosh, they'd still look awfully good. And even the lower moving average there, the lower red line, is 1955. Nothing ugly about that, really. That would still look pretty good when you look at the overall scheme of things. So kind of scary that they could be due for a little back off here. But again, just like the opposite of bonds, they held up really well against the news of the terrorist activity. So, boy, wouldn't be in any hurry to sell them just yet. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with, and I hope we don't have any more terrorist crap to deal with.